Bazaar Morning Call. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on another fresh new edition of Bazaar Morning Call, Thursday morning, running towards the end of the week. We're coming to you as always from the CNBC TV 18 Motilal Oswal studios. I'm Prashant, with me, my colleagues Sonia and Nigel. Guys, hi, morning.
Morning.
Hi, good morning. It's the start of a new month and here we are right in the middle of the year. I mean, who would have thought this year would pass by so quick, right?
Well, that's right. It's start of a new month. I'll tell you what, though the odds are not in favor in the month of June. I looked at the last 10 June months and the Nifty is down 6 out of 10 times. So it's mildly in favor of the bears on that front. But when you have a good month, you have a very, very good month as well, like 2020. So let's see which way it swings this time around. But new month.
Absolutely new month, and hopefully history doesn't repeat itself and the market doesn't have
half
a fall.
the year is left, by the way. So we're done with the year.
I look at the glass half full. You look at it half empty. That's not
Why
my
do you want
fault.
the year to go by so fast? It's okay, yeah. Markets, by the way, have been doing quite well.
Yeah.
So let's actually kick off with the latest and the Taza information this morning, right? And this has happened this morning. I'm talking about the US debt ceiling drama, which is now finally drawing to a close. A vote was scheduled for, US time, but early morning, our time, 6 a.m. Or so, our time. And the House has actually passed. The House of Representatives, which has got a Republican majority, has passed the bill quite easily. So it's gone through. Now, the next step is for the Senate to pass the bill, which will happen perhaps later, tomorrow, over the weekend. But it has to happen before the 5th of June. The deadline by all which is being pegged by many is the 5th of June. So it has to happen before that. Only after the Senate approves this will it land on the president's table for his signature, and then it takes shape. So, but it should happen. It's past the House now. I think it's a formality. So this drama is now finally perhaps going to be behind us. I looked at US equity futures. They were mildly in the red, but they're in the green, but not by very much. It's not a big rally or anything of that sort. Month-end choppiness skewed Wednesday's price action, the overnight price action. The changes will come up on your screen. The S&P down about 0.6%, the Nasdaq about 0.6% as well. I put out an article yesterday. I will probably put out some data this morning as well. 100% of the S&P 500's 10% rally in 2023 is led by 6 stocks. 500 stocks in the index, and 6 stocks have contributed 100% of the 10% rally. On the Nasdaq 100, it's the same 6 stocks contributing to 70% of Nasdaq's 30% rally this year so far. Nasdaq is up 30%. Who would have thought? So these are just incredible numbers, but the point is we are coming up into important sort of levels around which the upper end of the range that both these indices have traded in for the last 1.5 years or so. Now, what happened last night? 2 FOMC members who are also voters voiced their preference for a rate pause in June. In the Fed meeting, they said, well, we should perhaps go with a pause. And markets got excited, especially on the rate side. So the US 2-year, the 5-year, the 10-year, the 30-year yields all ended at intraday lows. So I think that is important. The dollar index also retraced. It hit a high of 104.7, but it finally closed at 104.15. Having said all of this, and of course the opinion is what prices reacted to, both the dollar and the yields, data tells you otherwise. So we had what is called the US JOLTS index, which is nothing but job openings in the US. That has come, for the month of April, that has come in extremely strong. And this is coming in right before the jobs number, which we will get tomorrow out of the US. And that's the big number which will decide Fed pricing one way or the other. So, while voters on the FOMC are saying perhaps a pause is warranted, data is saying that the labor market is still running very, very tight. Tomorrow's sort of indication will be very important. Here in India, yesterday, we saw a pullback. Both the Nifty and the Bank Nifty, they saw cuts. It was not a one-way kind of a move. There were attempts at a bit of a pullback late into the session. I just want to put out one thing. Yesterday, especially the NSE cash segment saw the second highest turnover ever in history. It's quite incredible. There was the MSCI factor as well. But that was, even adjusted for that, I think the numbers were extraordinary. The last 30 minutes yesterday was quite violent. And you got a sense that something was going on, but I mean, the MSCI kind of muddled things. But finally, at the end of the day, the volumes were the second highest in history. Now, the levels that you need to sort of work with, the resistance for the Nifty has moved up a little bit. It's basically the rising channel. The upper band of the channel is now moved up to about 18,800. If the uptrend has to stay intact, even with pullbacks, etc., it should not overlap 18,420. That's the lower level, which one needs to watch. The 20-day is still lower than 18,420, but we'll put that out as we go along. Bank Nifty must hold the 20-day moving average. That stands for the index at 43,745. We left off at 44,128 yesterday. And on the way up, the Bank Nifty for the uptrend needs to cross the recent high of 44,499, almost 44,500 or so, which was the recent high the index needs to take out. The SGX, I think, is indicating a softer touch, a softer start. Maybe as we head into the sort of 9 a.m. Start, things will moderate a little bit. It'll be perhaps a little better. The debt ceiling has gone through. We got the GDP numbers last night from India, which have come in and beaten expectations quite handsomely. So we'll see. 60 points lower. It was about 80 points down about 30 minutes back. So there is some improvement which seems to be coming through. Sonia.
Well, absolutely. I mean, this morning, it looks like it's going to be one of those mornings where once again the market is going to start on the back foot. But whether the dips get bought, time will tell, right?
Yeah.
Because for now, the run-up has been pretty smooth. I mean, it's a 10% rally that we've seen from the lows in March. So the market has covered a lot of ground. Just a couple of things. The flows continue to be on the mixed side. So yesterday as well, FIIs bought a bit, but DIIs have sold for a second straight day in the cash market. So domestic institutions sold to the tune of almost 2,500 crores. So big selling coming in from the domestic fraternity. And that is something that you perhaps just want to be a bit cautious about. Now, as we've been telling you, the US markets were also under pressure. This morning, Asia is also not looking good. The SGX Nifty is also down about 60 odd points. So that resistance level that the Nifty is facing continues to be at 18,600. That's the big resistance and the ceiling for the market in the near term. Doesn't look like there is any trigger which could take the market out of that level in the near term. A couple of local cues, as Prashant was also mentioning. The GDP numbers are good, but this is backdated information. Generally, the market already reacts to it. But nevertheless, no taking away from the fact that both FY23 as well as Q4 GDP data surprised positively, 7.2% coming in for FY23. But the data that I look forward to today is the auto sales for the month of May. And in that context, things have slowed down a bit. It's tepid for the passenger vehicle space. There's no major recovery in the two-wheeler sector. The medium and heavy commercial vehicle sector also has not recovered as much as what the street was expecting. So in that context, there could be sluggish data coming in from the auto sector. And the auto stocks have been the big movers. Let's see how it pans out today. But I think this resistance level of 18,600 could be a bit of a ceiling for the market for a while now, until we get any major cue on the upside.
Well, Sonia, yesterday was actually a very good trading session, because Prashant made that point about just a few stocks taking the Nasdaq and some indices higher. We've had that on the Nifty as well. But now we are seeing some broadening of this rally, which I think is heartening. Yesterday, for example, you had the Nifty that ended much lower, but you had the broader markets, both the mid-cap and the small-cap indices, well, they ended with solid gains. And take a look at that. Small-cap index up 1%. On a day, the Nifty is down 100 points. So a lot of portfolios actually would be feeling good. So it wasn't such a bad trading session. In fact, I would say it was a good session. Now, the key headline indices, well, they were under some pressure, but there was no big shorting or selling. As we know, yesterday was the MSCI rebalance as well. In fact, there was unwinding of long positions, particularly on the Nifty. I say that because the Nifty open interest was down by close to around 6%. Now, the range-bound trade is likely to continue, but I think it's with an upward bias, provided the 20 DMA holds out. What did the FIs do yesterday? Well, they were part of the unwinding. So they unwound close to 18,000 long contracts. They added some mild shorts. And now the short positioning at least is moving towards the halfway mark. So the flows have been good in the cash market, but you like some shorts in the system. If they get trapped on the wrong side, well, that's what gives their additional fillip. So that's why I say a net short market actually is desirable from a bullish perspective. The index option side, well, they're telling you that maybe at higher levels you'll see some selling because there were more than 1.5 lakh call contracts that were written. The PCR, we pointed out a couple of days ago that it had moved to the upper end of the band, close to around 1.4. Now it's at the midway of the band because the band has been 0.7 on the downside and on the upside around 1.4 odd. We had a couple of strikes that were very active, and I'm highlighting these strikes because today's expiry. 18,600 call, 18,500 put as well. Both of them were fairly active in trade yesterday. And just plugging in the premiums. Yesterday, the premium ended at around 25 rupees. At the start of the day, it was close to around 50 rupees. So you plug that in on the downside, 18,450. On the upside, 18,650. If you want to get in, you look to get in closer to around the lower level. That's 18,450 odd. The Nifty Bank, that as well had a bit of a down day, was down close to around 300 points odd. But the positioning is such out there that the 44,200 call, the premium at the start of the day was close to around 300 points. So it's trying to guard the upper levels of around 44,500. However, at lower levels, the 20-day DMA comes into play. We almost bounced off that mark yesterday, and yesterday's low as well. So 43,750, 43,800, crucial for the Nifty Bank to hold. If you want to go ahead and take a long trade, maybe closer to around 18,450 odd for risk reward with a bit of a stop loss given that today's expiry as well, and SGX Nifty suggesting a pullback.
Okay, and lots happening on the show. It is finally the end of the earnings season, so
Wow.
we can put that behind us, right? And there are a lot of reports coming through on how earnings has panned out this quarter. So let's get one of them going. On the equities front, first up we have Gautam Dugar of Motilal Oswal Financial Services, who says that the Q4 FY23 corporate earnings were impressive but lopsided. The Nifty exits FY23 with an 11% EPS growth. They've reduced FY23 Nifty EPS by 0.6% to 807 from 812, largely due to notable downgrades coming into ONGC, Coal India and BPCL. FY24 EPS also saw a cut of 0.6% to 972 from 978 due to downgrades in ONGC, BPCL as well as Infosys.
Okay, let's get you some money market views as well. On the rupee, Parul Mittal Sinha of Standard Chartered says the USD INR traded in a narrow range last week. Dollar strength and hawkish Fed speak, higher inflation data and weaker yuan was probably offset by FPI flows of $6 billion in May and strong rupee fundamentals. She expects the rupee to trade between 82.85 to 82.25 to the dollar range for the next week. Adds that apart from the US dollar, focuses on oil prices with OPEC plus decision due on the 4th of June.
All right, and on the bonds, Parul Mittal Sinha says that the domestic bond yields traded range last week despite volatility in global rates on debt ceiling developments, even as easing domestic liquidity helped lower overnight rates. They see that Indian 10-year benchmark trade in a 6.95 to 7.1 range for the next week. Apart from global rates and oil prices, MPC decision is on June 8th. That's in focus, and Standard Chartered expects a pause on rates with no change in stance. Macro projections, but we'll keep a close watch on guidance on liquidity.
All right.